Good afternoon from OANDA here in Asia. This is the weekly market insights. Let's kick straight to it. Chinese data, we've had quite a heavy schedule today and yesterday. Money supply, M1 in particular, rose by much less than expected. There's two ways to interpret this. Either the economy and lending in the economy and activity in the economy is starting to peak, or perhaps Chinese consumers, because they couldn't go and spend at Chinese New Year, have decided to put their deposits into longer term deposits, taking that money out of the system. We'll have to wait and see. This one's a developing situation. But we also saw the China trade balance today collapse to 13 million US dollars. It should have come in around 50 million. Most of that was because although exports did fall, imports raced higher, something like about 30%. And the subsectors that the imports were increasing in were right across the board, except for crude oil. Again, there's two ways you could cut this cake. Either that domestic demand and factory future production are recovering rapidly and in rude health, and so they're importing more materials from the United States, from Europe and Asia. Or you could say that exports are starting to slow down and perhaps we've seen the best of the China recovery, which would be a bit of a negative for markets. China shares did actually edge lower today, but I think the jury's out on this one, to be honest. I think that we may have seen the best of the 2020 recovery by China, but I don't think it's by any means over. And the fact that they are importing so many materials across so many subsectors does actually say to me that there's a huge appetite there for consumption, and that we shouldn't be starting to get too worried about China running out of steam anytime soon. We do actually have a large data dump from China on Friday as well. We have industrial production, we have retail sales, but we also have Q1 GDP as well, and we're expecting pretty impressive numbers out of that GDP in particular, so more data to come. If we do look at the CSI 300 chart though, which is a combination of mostly tech companies between Shenzhen and Shanghai, and it's a real bellwether for Chinese markets. They've been moving sideways for a while now, and we can see that the CSI 300 failed at 5,200 and it is in danger of actually testing 4,800. The persistent worry in China is that Chinese PBOC, the People's Bank of China, has been withdrawing liquidity since May last year. And the worry is here amongst Chinese investors, they may have overdone it. And we could be in for an extended period of weakness in Chinese equities because the PBOC is tightening monetary policy too fast and by too much. Tonight, we also have China, United States CPI will be very closely followed. I think the danger here is that CPI actually outperforms month on month and rises above 0.5%. That could see US bond rates spike, the US dollar strengthen, equities weaken, etc., etc., etc. I don't think this bond tantrum or this bond taper tantrum has run its course yet, and people are being very complacent about it. Looking in Asia, though, we see dollar INR, dollar Indian rupee. I touched on this last week, and we've seen again that it's continued to weaken this week. They've brought in export bans for AstraZeneca vaccines they're manufacturing there. Cases are exploding. And tomorrow we have WPI, Wholesale Price Index. If that goes above 6%, I think we can see another big leg down in the actual Indian rupee with the economy struggling on multiple fronts, complicated by COVID-19 now. If we look at other risk barometers, we look at the Aussie dollar chart, we can see here that it actually failed at 78 earlier in the month, and it is just sitting above support at 76. And as a risk barometer in general for the world, I think it's actually sending quite a strong signal that this risk event or this risk aversion hasn't run its course. And if it drops tonight, I think that will confirm that outlook. Finally, we look at Bitcoin. We can see, as I was recording this afternoon, that it's testing all-time highs around 61,000. Its next mathematical target is 64,000. Now, whether you believe in cryptos or Bitcoin or not, it does appear to be eating gold's safe haven risk aversion lunch at the moment, and it does look like it's set for further gains into this week. Thanks very much for tuning in, and have a great week ahead. Bye-bye.